Hello and welcome to the Green Profit Academy Pros podcast. This show digs into the challenges in growing a lawn care and landscape business while maximizing your profit. I'm Christeen
And I'm Steve Bousquet. We are the green industry experts in profit, growth, and leadership.
Good afternoon, Christeen. How are you today?
I am good. It's Monday. We've had some sunshine. It's always a beautiful thing. So I got to spend some time outside this weekend. How are you?
Is your snow gone?
Yeah, we have no snow on the ground. We actually kind of hit in the 70s, the low 70s this weekend, even though the wind was so kind to show up and be part of that sunshine. It was still nice to feel some heat.
Yeah.
But I think the snow is coming back. It's not quite done with us yet.
Oh. Yeah, you guys can get snow all the way through April.
Yeah, typically we do not plant anything until after Mother's Day. That's kind of our rule of thumb, is snow can fall until Mother's Day. So just these little random snowstorms. So yeah, it makes you appreciate the summer when it does finally arrive.
Yes. Nice, long, dry days.
Yeah.
Today's podcast, which happens to be number 59, that went pretty quick, is the top financial challenges facing business owners and how to overcome them. Running a small business can sometimes feel like we're guiding a ship through a storm, especially when it comes to handling our company's finances. Whether it's keeping your cash flow healthy or staying current with tax laws, the obstacles can appear overwhelming. However, there's no need to worry, fearless business owners. In today's episode, we're going to be tackling some of the major financial challenges that you may encounter, and we're going to offer some useful tips to help you navigate your way to success with ease.
Yeah, so I feel like this is something that, you know, it's always a problem until you have a system in place for it. Like it's never gonna go away, right? Like hiring, marketing. So managing a cash flow, it's always going to be a problem until we have, you know, that good solid system in place to address it. And we've talked about lots of different processes that you can implement in your company to navigate your financial challenges in your business. One of them being profit first, right? Steve, you call it your freedom system.
Yes, my freedom system.
And it helps you get that financial, you know, side of your business really dialed in. But sometimes we need to raise our awareness around, you know, what else, right? And what else is the challenges that can impact our company as it continues to scale and grow. So the first one on today's list, it always seems to be the first one out the gate, is cash flow mastery. So it's there to keep our business afloat. We need to understand our cash flow and, you know what that is in order to navigate the storm when it comes to cash flow.
Yeah, if we don't have cash, everything is painful. I mean, I don't sleep, you know, before I did Profit First and wondering about payroll and equipment payments. You lose sleep, you wake up in the middle of the night. It's stressful. You take it out on other people. So cash flow is always on the top of everyone's mind. It's the biggest challenge in 90% of businesses.
Yeah. And we need, again, cash flow for our day-to-day operations to run smoothly. And, you know, even when sales are down, you know, or expenses rise unexpectedly, like we still need to know the ebbs and flows. And there's some solutions that you can implement in your company that will support, you know, consistent cash flow and staying in front of it. So this way, you're not trying to solve the problems and close the gaps, you know, with your cash flow process while you're living that cash flow struggle, right? We don't want that problem. So one of them that I always suggest is proactive invoicing. And we've gone over some invoicing strategies on previous podcasts. So we want to make sure that one, you know, you have a software system, right, in place. Like that's really important as you scale and grow your company, that you have a solid software, industry-based software program that you're functioning out of, and also having a an accounting software too. If that industry software can't be an accounting system for you, making sure you have something like QuickBooks in place to sync, ideally, integrate with that industry software. And you want to be able to invoice your customers very quickly. So, you're not showing up at their door with a paper invoice or a little carbon copy where you scribbled something on and you're saying, hey, yeah, we need to collect a check. So it makes it really easy for you to follow up on late payments or missing payments if you have that invoicing system set up in your company.
And there's a lot of phone apps that invoice. And even, I follow a lot of Facebook groups and everything. And even some of the one-man companies, they're using these phone apps. So they're doing the yard, they're cutting the grass, doing one app, and they hit bill right away. And they have it set up so it hits the customer's credit card, and they charge back the process. They call it a processing fee, and boom, boom, it's really swift. So that money's in that bank every day. And so I know if you don't have a bookkeeper, that's a great way to do it right on the phone. I was like, that is just amazing to have that. Yeah, the quicker you can get invoicing out. One of the things that I love about invoicing when I learned is framing it up front, letting your customers know how you're going to get paid, telling them that during the sales process so they understand what it is. So they're not surprised, oh, you want a deposit, or you want to get paid, the day the job is done, or you want to get paid in advance, or you want to, get paid, there's a prepaid discount or stuff like that. So, bringing that up during the sales process.
Yeah, I definitely the road of expectations, right? It's guide them down that road, give them a map beforehand. That's really, a great strategy. And one of the other ones on the other side of invoicing is expense monitoring. And this is an area in all the years that I've been working with small businesses, over the past 20 plus years, expenses, like they just look at them like they happen, right, in the business. And they're like, well, I don't really know what we like. I know we spend money on materials and we have employee costs. And of course, there's rent and truck payments and various things like that. But they're not really looking at what they're truly spending. And, when we talk about these companies that we've worked with that have these beautiful profit margins, they're really taking the time to look into their expenses and doing the reviews. And typically, if we have a company that comes back to us that's having cash flow issues, what we find is they stopped looking at their expenses and they got so comfortable having all that money, they just fell right back into that old habit of, the spend starts to creep. And then they don't realize that creep of that spend. And then I do an expense review and I ask them all these questions, being the devil's advocate, going, what are you spending here? What are you spending there? And they're like, yeah, we probably really shouldn't be spending that. So monitoring expenses on a regular basis and not buying into the mindset of, well, this is the cost of doing business. It just is.
And one of the basic expenses that I see that can get us in trouble really quickly is, it's springtime, we get behind. So we start throwing people at work. We start adding guys to crews. The crew size gets too big. The foreman doesn't want to manage that many guys. Things are not efficient. Maybe there's not enough equipment, 2 wheelbarrows on a 3 or 4 man mulch crew, right? You buy 4 more wheelbarrows and now you're super efficient, but just simple things as too much labor. The crew's too big, and then where they overhire because people miss days. So they're like, oh, if one guy misses a day, we're behind. So I'm going to overhire all this extra labor. And then they're not paying attention to that labor percentage cost. And then the other thing is buying the equipment, all this equipment that we all love in lawn care and landscape industry. That just ends up, it needs to be a percentage of your total revenue, and also percentage of the revenue generated by that piece of equipment. So paying attention to that is crucially important.
Yeah. And that's why I love the profit first system, because it gives you that quick glimpse on what your company can afford, right? Even if you start out with just the basic system that Mike outlined in his original book, it gives you like that income, right? The owner's compensation, the profit, the tax, and the operating expenses. And then the step beyond is what's outlined in the Profit First for lawn care and landscape businesses. And the scalable growth business model is a really great monitoring system if you're following that, because then you can really dial your company into what it can afford. And when you can't afford it, when you're going over those percentages, you can start looking at where you need to cut costs. And I always advise, when cutting costs, don't cut, the costs that are providing the value. Like, don't cut your employees' pay, right? They're out there working hard for you. Don't go cheap on the materials. Cut things that are, kind of a perk, right? You're going, oh, well, we want this. Cut the wants, not the absolute needs that contributes to the company's overall value and how you deliver your product.
And another thing that can be very expensive is adding services, going wider with your service offering, because you have to have all this capital to buy, equipment or tools and talent that you're only going to use for a very short period of time. So narrowing your niche is also a great way to monitor your expenses. Rent equipment if it's only going to be used every once in a while, and not buying that, for sure. And the next one is cash reserves, building a cash reserve for emergencies through regular savings. And this is crucially important because, it's not if it's going to happen, it's when it's going to happen. And if COVID was not the best example for that, I know that was once in 100 years, but there's other things that happened. 9/11 happened. The 2007 housing crisis happened. The 1987, the bank failures that happened. So it's going to happen. Having this cash reserve is vitally important.
Yeah, and we share some tips around that in the book Profit First for Lawn Care and Landscape Businesses. So we talk about, especially in this industry, like having a flex account, right? Which can support you during your slow season, when you're not making all that money and everybody kind of seems like they don't want to, sign up for services, or they're going to put things off. We typically kind of see it like when people want to go on vacation or their kids are out of town, kind of seasonal events. We have the down season. So when your company isn't producing revenue, right, being able to save up for that down season. So you're looking at, like, if you're 9 months production, that 9 months production covers 12 months of expenses. So looking at it from that perspective. And then also, you're getting your pricing dialed in so you can start overfunding, your business, basically. So being really tight on those expenses, making sure that your pricing is dialed in, and it gives you that extra, so that profit to save up in the company. So that way, when things do get tight, you can then, dip into that. And we also talked about the vulnerability account, to where if you live in an area to where you're impacted by Mother Nature, making sure that you have that reserve, to when she does strike, you're not worried about your business's long-term sustainability.
So during this winter, a lot of people will reach out to me like they're broke in the middle of the winter, right? Because most of these guys were down south and work was light and everything. And the challenge is, okay, so yes, it was hard this past winter, but guess what's coming at the end of the season? Winter. Guess what's coming 12 months after that? Winter, right? So if we don't have a plan for that, guess what? It's going to be the same story. And the stress I heard, the panic in their voice I heard, the kind of gut wrenching, like, what do I do? Like, help me out. And so we want to dig our well before we're thirsty, which is saying we want to make sure we have our money in the winter before winter. So that's why, I love Profit First. You have those accounts. It gets us to tighten our belt a little bit and only, get the things we have to have. Like you said, Christine, things that it helps us produce revenue. It helps keep our team safe, and it helps our team keep moving forward in a really productive way, and building those accounts up. Because I had to pull over a couple of times when I was driving during conversations, because I had to really pay attention and listen to these guys, because they were between a rock and a hard spot. and they had, gone to every, well, and it was dry. So, and then what happens? I start trying to encourage and coach them, and then the season starts up, and they're gone. And we have to get back on track. We have to set up those vulnerability accounts. We have to set up those down season accounts because winter is coming, and we get distracted by busy. And busy is the death of progress because we're not planning, we're not preparing for winter, and it's coming whether you're prepared or not.
Yeah. And I think that that's one of the telltale signs, right? To where if you're struggling through certain seasons, it's not that season that's the problem. It's everything leading up to that season. It's your annual, operations, how you're operating your company, how you're spending your money, how you're pricing your services. So it's really easy to focus on the pain points that we're experiencing right now and kind of, being Captain Obvious about it and going, well, it's this and it's that and it's this. Well, it really isn't, right? It's everything leading up to that point and after that point. So getting into that mindset of being more aware 365 days a year versus just during, let's say the 100 days of hell, that's a shift. And if you don't have that mindset right now, I would say practice it in this moment, because right now you are in the 100 days of hell. And think about while you're there, what happens when you're not there, and trying to tie those situations, to the moment that you're in now. So, because it just doesn't happen in the heat of the moment, it's something that continues, to contribute to the problem.
And on the other hand, I work with someone down in North Carolina, and I worked with them last year, and we had that winter season account, and they literally did not have to touch their line of credit or their credit card the entire winter because they had saved the money. And it was painful at first, but when they got some momentum saving, and it wasn't as much money as they thought they were going to have to save because they did have some revenue coming in. So this was kind of the extra part of the expenses that the revenue that they had coming in the winter weren't covering. So they would borrow, credit cards and line of credit. Then they would have to spend spring paying it back. Now they're going into the spring without paying. They don't have to pay back the line of credit and the credit cards. And they're like, oh, this is different. This is a whole different feeling.
Yeah. Yeah. They're experiencing a whole new normal, which is where, we want to get them, right? So the next challenge when it comes to your cash flow is having capital for growth. So we all need access to capital to fuel the growth in the company. We don't want to break the bank and also max out all lines of credit when we're looking at growing our company. We want to do it smart. We want to work smarter, not harder, and understanding, how we can kind of set the stage before we arrive. And that, again, I feel like that's something else the Profit First system contributes to, is allows you to plan, and the scalable growth business model dives really deep into that, of giving you those metrics to look at to see, well, where should my gross profit margin be and what should we be spending in these different areas of the company? So it allows you to build your own capital to fuel your growth. And there's some, other areas where you can get capital, but you need to be smart about it. And, every company needs to have these funds to even consider expanding and growth, because growth costs money. And it can be really, really hard when you're in the thick of it to try to find, some sort of capital to get funding when you've already overextended everything that you have and you have no cash in your business.
Yes, and you have to be careful about waiting till the last minute to buy your stuff, right? Again, we know if you're in mowing, right? Your mowers are going to last 3 years. So guess what? In 3 years from now, you're going to need more mowers. So in 2.5 years or even 2 years, you should be lining up the financing for that. And there's some great financing companies in the lawn care landscape business. Sheffield, and I'm not promoting anybody or endorsing them, but Sheffield has been very friendly with the lawn care and landscape business. Sheffield Financial, they've been very good. So, but making that relationship before you need it. And Profit First if you share what you're doing in your business with Profit First with a banker, that is like, they've never seen anything like that before. Even though Profit First is popular, it's all across America. When you show your balance sheet to your banker and it has all the accounts allocated correctly, and first off, the fact that you have a balance sheet that is actually legible and readable as a financial statement just puts you in the top 10% of all small businesses. And then when you're showing them how you allocate the money, now you're in the top 5% of all small businesses across the country. So that is really positive. And you want to get those relationships going, earlier than you need the money. And credit unions are also great for loaning money, especially for local businesses, and small local banks are very friendly. And now, Prime Plus One is really good rate. Sometimes you can get it less than for vehicles, but you want to do that sourcing beforehand. There's having a solid business plan is really important. That 5-year business plan, and the work we do on our mission, vision, purpose in our business accelerator program. One of our clients in Ohio shared with me, they showed that to the banker, and he's like, I've never seen anything drawn out with so much detail and insightfulness. And, they were like, we wish we could work with more clients like you. So taking the time to develop that big picture and have it laid out in detail is a huge asset.
Yeah. And there's a win-win to that solid business plan. And one, when you present it to the bank, right, they're very impressed, just like you shared. But two, you're being intentional and you're laying out that path on what you're going to be spending that money for. So you're not just getting all this money and then going, oh, okay, well, we're going to use this for growth. Well, what does that mean? So you have that 1 year, 2 year, 3 year, through 5 year plan where you can see where you need to invest money or infuse cash into the business, and you're being intentional so that you're after, year one, you have this debt and you have nothing scrambling. That's not where you want to be. You want to really lean into that strategic business plan and kind of use that as your Bible on how to, get the funds infused into your business.
There's also alternative financing, exploring crowdfunding, peer-to-peer lending, or venture capitalists. And credit worthiness is super important. So you want to maintain and, make sure that your credit rating is good. So you're not either being denied or paying really high interest rates. And part of the credit rating sometimes can be having too much credit available that you're not using. And that can actually be a detriment for certain people. And then, or, being late or not making full payments, we want to make sure that we're doing all our payments on time. And that's why Profit First is so powerful, because we always have the money in the right accounts when the payments are due. Super helpful. So the next is planning for prosperity, budgeting, forecasting, navigating your financial future. And those are like scary terms, right? Budgeting, I hated doing it until I understood it really was just percentages of, and forecasting for the future. What are we going to need? And that's really basically goes back to like, okay, if I have 3 mowers now, in 5 years, if I add a crew, how many mowers am I going to need, right? 6 mowers if I'm going to add another crew. And that's kind of what that is, and how many trucks, and working with a financial plan through your mission, vision, purpose, and your 5-year goals. So creating that budget and doing the forecasting can absolutely be done. And it's one of those things that you can keep practicing on and getting better and better each year. So creating accurate budgets and forecasts can be complex, but they are crucial for long-term planning. And I get help for my budgeting because I worked with Christeen to help me do that. And it was, the first time I had at least my percentages dialed in for an entire year. And now with the forecasting, we can say this is where we are now. If we grow at 5%, what do our numbers look like? If we grow at 10%, what do our numbers look like? And we can do that for the next, 5 years. I actually have it drawn out for the next 5 years. If we grow at all those percentages, where are we going to be at? Because when you're doing $1 million a year, 10% to 100 grand a year. And if you do that for 5 years, you're going to be close to $2 million, because it's going to be, 10% on $1.5 million in 5 years, which is 150,000. So it adds up pretty quickly. And that's part of the forecasting that you can do. And your financial software utilize budgets and forecasting to give you precise projections. You want to have regular review, update your financial forecast regularly. So that means quarterly, typically. Monthly is a little too tight of a picture. You definitely want to review your financials monthly, but not for forecasting. You want to do that every 90 days. Now you can use milestones in your monthly. If you want to do $1 million in sales, during your green season, you have to produce so much per month. Right. And you can actually predict which months are going to produce the most revenue. Expert advice, consult with financial advisors to refine your budget strategies. This is totally worth it. I know I see a lot of times people will brag about how little they pay to get their taxes done, like $175, or, they don't need no stinking financial advisor. But if you want to get to a certain level, you need people that play at a certain level, live at a certain level, have a certain level of business acumen. And that's not the cheapest guy in the pool, right? You want to go and get help from people who really know what they're doing and who have helped other people grow their businesses. I have always found that it is so beneficial to me when I've paid people, and it's exponential. So you pay them and then it continues, the benefit continues for, 20, 30 years, for as long as you're in business. It's not like it's a one-time thing.
Yeah. And I know I've shared this before. It's one of those things with Profit First where I feel like it's kind of like this, it's not talked about, like how you could use this system to do some sort of forecasting. And I've worked with so many clients where I've showed them this trick. I have a video in the toolbox where I unpack this, and you can use your Profit First allocation calculator to do forecasting for your business, which is, what Steve was talking about when he was saying, how I worked with his team, was I showed them this trick and how they can use this tool to not only forecast on a monthly basis to see if they're going to be able to fund, their accounts correctly, but on an annual basis and quarterly basis. So if you don't have a super savvy budget dialed into your accounting software, which is not uncommon in so many businesses these days, you can start off with just, trying to see like, what's your rhythm going to be? How much cash is going to come in? Can you use that cash to work for you in that for using your Profit First allocation calculator to forecast?
Core Growth Strategies provides business growth management solutions through cloud accounting, bookkeeping, and strategic business consulting programs. Our team works with small businesses in lawn care and landscape and trade industries throughout the U.S. We increase our clients' business acumen by creating business performance transparency through financials and strategic advisement based on industry best practices and benchmarks. Our experienced team provides support, guidance, and coaching, thereby allowing our clients to connect with viable data and discover their own solutions. Core Growth Strategies programs and services are designed to get your business from where it is now to where you have always dreamed it to be. Visit us today at coregrowthstrategies.com and follow us on Facebook, Instagram, or LinkedIn. Don't miss our exclusive limited time podcast special. Just mention promo code GPA Pro to any member of our team during your complimentary consultation, or enter the promo code on our site when you sign up for one of our online programs. That's promo code GPA Pro.
All right. Next is becoming tax savvy and having tax savvy strategies, tax compliance and optimization, and minimizing tax liabilities and maximizing tax benefits.
Yeah. So I work with a professional tax person, and not all tax professionals are alike. So, you might have somebody who they don't really talk to you very much. You want your tax person to talk to you. You want to understand, what implications are there, and what opportunities, right? So I don't even call them a tax professional. I refer to the really good people as tax strategists, because they're going to strategize around, your tax compliance and what you can optimize, and leverage when it comes to your tax liability. It is one of the things that I want to share is the mindset of when I don't owe taxes, I'm doing good in business. That is not true.
That is not true. No.
So yeah, you do not want to base your success off of what you do or do not, owe, what you do owe or do not owe when it comes to taxes. So you can owe very little because you spent all your profit, right?
And you have big equipment payments, and yes, so you take the accelerated depreciation, you lower your taxes, and now you're spending $5,000 or $6,000 a month too much on equipment. So you're spending 50 or 60 grand a year on equipment that's underutilized, that's depreciating rapidly, and you are paying. And on top of that, you're paying taxes on those payments that you're making because you took the accelerated depreciation. Yeah, do not judge your level of success based on how little you pay taxes. And I'll bring up these groups on Facebook. Be very wary of them. They're like, I only paid this much in taxes and that much in taxes. That is not a good indicator. Unless you are super wealthy or absolutely broke, you're going to pay your share of taxes. It's either now or later, but you're going to pay your share of taxes. And if you're not paying enough in taxes, you're probably not making enough. So that's really an indication. If they're not paying any money, that means they typically took their accelerated depreciation. And if they have kids, they have the child tax, and then it just drops them below the point of, paying any real taxes. You want to pay your share of taxes. You also want to make enough money to be paying your share of taxes. So, the game is to be making enough money that you're in that 24% tax bracket, but all your taxes are paid for by the business. So you're still getting your pay. Profit First teaches us how to have the business pay for our taxes.
Yeah. And you could also be in a situation to where you have a really good tax strategist, and they're advising you on how to, not pay the tax liability because you're putting those funds to work to produce something else. So, and those are very advanced, strategies, but working as your company grows, you want to get to that place to where you have some advanced strategies in place to where your liability is working for you, and you're not having to pay it out to the IRS. So there's some really great, strategies that you could implement. You also want to make sure that you're maintaining your financial records, right? These are really important to have accurate tax filings. I don't know how many clients that we have, started working with, and because they didn't have their books all cleaned up, they had, what they filed their taxes, and it was their, tax books, and then they had other books, and they're like, well, we just can't depend on these. And, but we just do invoicing and stuff out of this account. So you don't want two sets of books. That's a huge no-no. You want one set. You want to maintain your financial records so you can have your taxes filed accurately. And, you want to engage in that tax planning to take in advance, to take care of, those deductions and credits that you can leverage. Because tax laws are changing all the time. And we have enough to track in business. We don't need to figure out what the tax laws are for ourselves. And we also don't want a software like TurboTax to automatically just throw your numbers through it and come up with these little ideas for where you're like, yes, no, I don't know. What does that mean? And you go down a rabbit hole, and then, your taxes are filed incorrectly.
Yes. And if you have a good accountant, they're going to be able to actually save you money, because there's like construction tax credits and there's employment tax credits. And there's so many things to know about that a good accountant can help you. And, I've worked with people as clients who are just, when initially I work with them, they're doing everything to not pay taxes. When we switch their mind shift to making money, and they end up much more prosperous than when they were trying to save taxes. It's kind of like, tripping over dollars to pick up pennies. And they're like, oh, this is way more fun to make all this money and pay some tax than spend all this time trying not to pay tax and being mostly broke.
Right. Okay, so let's see, what else do we have here? So we have one of my favorites, so decoding financial reports, right? Who would love reading financial reports? Well, typically accountants and people who are into your company being very profitable and understanding the numbers. So the financial reporting and analysis, it's really a compass for decision making in your company. Right. So you can generate and interpret these financial reports from your accounting software. It doesn't have to be overwhelming, especially if you have, your system set up to properly report the information and you're not creating that garbage in, garbage out. So you can look at these financial reports to really dial in the financial health of your business and what it is doing for you.
They are fun if you understand them, and they're honest and they're clean, and you truly understand what the numbers mean on the page. And taking the time to learn about how to read financial reports have been worth it. I was not into it, and fortunately, I got coaching. I found a book, Accounting for the Number Phobic. That was a tremendous help. Mike's, Profit First book, and then Profit First for Lawn Care Landscape Businesses. It explains much more about how to read a balance sheet. Once I understood how to use a balance sheet as a tool, my business acumen, my business profitability skyrocketed.
There are some, very basic, like why I like the Profit First system. It can help you understand and connect the pieces that your financial reports are trying to tell you. You definitely need a solid accounting software. So if you don't have one and you have everything in Excel at this point, you need to move to a financial software. I have been using Intuit forever. So QuickBooks, now they have QuickBooks Online. Everybody's moving there. There's some companies that say, I'll never leave QuickBooks Desktop. That's going to get really, really expensive for you. And they are continuing to make improvements to QuickBooks Online, just to make it better, easier to use, and to track your company information in there. I'd also suggest, and this is how we work with our clients over at Core, is to take some time to learn the basics of financial analysis, and hire an expert to help you with that. So with our clients over the years, we have increased their financial acumen because we're having those conversations with them. We're unpacking their financial reports with them, and we're helping them connect the pieces. So you want to work with a professional who's going to support you in learning, the acumen around your business and your financial reporting. So that way they can speak your language and you don't have to speak theirs. So they shouldn't be throwing all this industry jargon at you that you're like, I don't even know what that means. They should be teaching you in a way that you can understand.
Yes, I love that industry jargon, they don't even know what they're talking about. We're going to talk about nonlinear dynamic chaos in resource management by input diversion. You're like, just what? That doesn't mean anything. Tell me what I need to know and tell me what I need to do. So a lot of times, they're not even sure. If you hear somebody lay that BS on you, call them out on it and make them explain it to you.
Yes. Yeah. Because I mean, in the accounting world, we do not expect our clients to understand what we're saying. So we explain it to them in a way that they can understand. And then we'll share with them, well, what are we referring to? Right. So if we're going to explain cost of goods sold, we say, okay, so let's talk about this area. This area does X, Y, and Z, and it is called cost of goods sold. So it's what supports your company, to produce the product or service that you're providing. So over time, they can understand and they know their way around, those financial reports. It's also really good to identify KPIs. And this is another area where I think business owners, they don't have key performance indicators, which are these KPIs, to help them monitor their business and know, like, okay, so my gross profit margin is X and it should be X. So, my gross profit margin is 50% and I want it to be 60%. So how do I change that? Right. So you want to start off, if you don't have any, start off with a few to monitor and make those better. So you can identify ways to fix your where you're at and figure out how you can get where you want to be.
And, just like the accountants will talk accountant speak, I'm guilty of talking lawn speak, and my staff has helped me to dial that back. Like, the customers would just ask a simple question about fertilization, and I'm going to go into, well, we have 5 nitrogens and they release at different rates, and the NHO4, becomes soluble and turns into a gas. And that's why we have these, organic fertilizers that have to be microbial digested, and then it turns into the gas, and so we put fertilizer on it, your lawn's going to turn green for about 8 weeks, then we'll be back. So that's all they need to know.
Yeah Make it simple. And your financial advisor, so your accountant or whoever you're working with, they should be able to give you some key matrix to manage and to track, so you can understand that.
Yeah. So key performance indicators. So we track what we call net sales per day. So that's going to be the total revenue per man minus the material divided by the hours. And that's going to be the net dollars per day. And then we also track gross profit margin. And we do that either by the day, by how much square feet they produce, or by the job. And those are the 2 KPIs that drive our production. And then, but also internally, when you have non-production, you can also set KPIs that are going to drive it, like sales per day, sales calls per day, inbound calls, outbound calls per day. So each one of those calls is going to produce a certain amount of action or revenue. And so that needs to be tracked also.
Yeah. Okay. So on to our next topic. So it's balancing debt and growth. And, debt management can be challenging, right? So you're going to have a balancing act between leverage and liability. And so what do we mean by that? One of the things that we've talked about is equipment, right? So equipment can be debt that produces revenue for you, right? So that's not so much as a liability, because you're putting it to work and it's paying for itself. Things like a line of credit where you just went out and you spent the money and it's not producing a return on investment, that's just a liability. You're going to have to pay that. Or a credit card that you charge up. And, it's like you go because you don't have the cash flow and you use the credit card for that season and you're like, well, now we have no cash to pay it. That's a liability. So, it's not producing any return on investment. And when it even did, because you're then using it for services, you missed that boat because you spent the money you made. So, it's a very delicate balance, and debt can cripple a business. But it's also, very powerful tool for growth if you're using it right.
Debt can cripple a business, but also trying to pay it paid off too quickly or inappropriately can also cripple a business.
Yes.
And one of the things that we run into when we start working with people, now they start having all this money they're not used to, and this cash is around, they want to start eliminating their debt. But that's, we need to have our down season account. We need to have our vulnerability account. We need to have the money allocated in all the accounts for all the 12 months. So getting people to slow down and realize that this is a long game. We're not rushing to pay that equipment off. That's paying for itself. It's generating money every month. It's a cash flow. It's leveraged debt. It's not debt in the sense of that there's no asset behind it. Because if you take a truck loan out, there's an asset. The truck is the asset behind that loan. So if you have the value of the truck, which is the asset, and you took it, let's say the truck was 50 grand and the loan's 50 grand, you have zero debt in reality, because your asset matches that liability. And if you have unleveraged debt is where you can get in trouble. And that's where a lot of these people that do these big buyouts and, big corporations, they end up with too much debt because they're just buying businesses, equity funds and stuff that can get them in trouble. So we don't want to rush to pay off our leverage debt. We want to let the equipment make those payments for us.
Yeah. And you want to regularly review your debts, right? To make sure they're serving the business goals. So what debts are you paying for? How do they serve the business? You might also be able to consolidate debt. So one of the things that a lot of the companies did that we worked with, they had, the EIDL that came, 3.5%. I mean, come on, like that's a beautiful rate. And they said, well, what do we do with this money? And I said, well, hold on, let's create a strategy, right? So some of the things that we did was we paid off some high interest loans, and then we reallocated the funds that they were paying towards those high interest loans, to the EIDL. Some of the other things that we did was we put that money into an account so they had the cash in their business, and then they could use that cash to pay down the EIDL, or they could use that cash to scale and grow their company. But we are very strategic about it. And you always want to prioritize those high interest debts, and if possible, negotiate, terms around them when you can. We have a strategy that we share through our Profit First webinars and our coaching program that helps you, pay down your debt. So we talk about it, in the book. It's talked about in Mike's book for the original Profit First book, where we have, we do a debt freeze so we don't create any more debt. And then we do, kind of like that snowball method, to where it's like we list out all the debts, all the interest and the balance, and we pay one off one by one by one. So that way you can get out of debt.
All right. The next is protecting your financial foundation, fraud prevention, risk management, safeguarding your assets.
Yeah. So fraud can be another one of those silent killer for businesses. And, the financial risks, around that, they really need to be managed. So you need to be aware, because it's not, especially these days, and we were just talking about this, with my team is, there's so much fraud out there these days. You get emails in where they're saying, hey, you owe this money. And then somebody then pays that. And then you're like, well, who did we pay this $5,000 to? I've never heard of this vendor. And they're like, oh, I got this overdue notice and I had to pay it, so there's all this fraud out there. We've worked with clients to where, they've had requests for wire transfers of, just hundreds of thousands of dollars. And they've had people that started making those wire transfers. We're like, wait a minute, what wire transfer are you making? Who are you making this to? So having, those safeguards in your business and making sure that, that risk is your team is aware and it's being managed. So it's, especially with the internet fraud these days, the cyber crime, it's out there. Some of the things you want to do is implement internal controls, right? So you want to have checks and balances for your financial processes. You don't want to have just one person who's able to pay whatever expenses in your company. And I know, Steve, you have somebody who submits this is what we were paying, and you still to this day say, yes, yes, no, yes, yes. So you have some controls in your company. Another thing is, I would say, is do an audit of, what are the controls you have set up in your company. And this could even be towards your assets, right? So are you managing your assets in your company? Do you have a way to check to make sure that your assets are being taken care of and cared for, and they're not just walking off the job, right? So it could even fall into that. And then your insurance policies, you can invest in a great insurance policy, but I guarantee you, if you are not showing compliance for due diligence, which means you are you have policies in your company and you're creating securities around these assets or these processes, they will not pay out your insurance claim if they find that you didn't do your job to protect that asset that you were insuring. And this can be internal controls of fraud if someone's stealing from you, or all the way down to, you're not protecting your actual physical assets.
Yes, you definitely want to pay attention. And, I do still sign checks personally myself, or one of my family members signs checks. And that we have co-signers on different accounts. And we also have different monies in different banks. And like our profit hold account, our vault, it's at a bank we have to go to and physically withdraw the money, fill out a deposit slip. We can't even write checks or move it electronically. And that protects that money. But making sure that the money is protected is super important. Yes, and making sure that also our team understands. So we have our IT company does education. They have to take courses, to understand when they see these you owe or what this was paid, and not just pay that and keep moving forward, because there are so many scammers out there. Having regular audits is really important. That keeps people honest. Most of the time when people are stealing, it's when they go on vacation and other people are doing their jobs or auditing their work. All right, next is going to be fostering a financially fit team. Human resource financials, investing in your team wisely. The challenge, payroll and benefits are significant. A major expense in a company, and managing it effectively is essential for both morale and the bottom line. So we want to have payroll systems. I use a payroll system, Paychecks. Other people use I don't know the name of the other. I think it was ADP or something. Gusto, that's the one.
Yeah, and I would say ADP, but everybody that I know currently that is using ADP is moving away from it because of the challenges with ADP.
Mm-hmm.
Yep.
Benefit analysis is really important. Do a regular review of the cost of the benefits to the employees.
Yeah. And this is something, right, that I think there's a lot of opportunity in this area, because as employers, we may have this idea of what benefits our team wants. But unless we ask them and we do a benefits survey, what we may think is important to them is not, always important to them, right? So some companies, they'll be like, oh, well, we need to add health insurance. Well, yes, health insurance can be a benefit and it can be a burden. So making sure that it's something that your employees want, and you're not providing health insurance to where they're going to have to pay $1,000 a month just to have that health insurance coverage, right? That's not a good solution. You might be better doing like an HRA, which is where you're contributing, and letting them submit an X amount of dollars every month. That is a tax benefit. So they get reimbursed, the company gets to deduct it, and the employee doesn't have to pay taxes on it because it's part of their benefit program. So, taking that time to go, okay, team, what do you all want with your employee benefits? What sounds good to you? Because what we find important in our lives isn't always important in theirs.
Absolutely right. We asked our team what was important to them, and it was very important to have a car available if they did not have a car, because most of my team, mom has a car, dad has a car. If one of those car goes down, and how do they get the kids to, fencing practice, soccer practice, dance, whatever it is, it becomes an issue for them. So we have a couple of loaner cars. There's policies around it, and it's not a forever car. But it really is a benefit that my team enjoys. And also extended holidays. So around the holiday, one of the biggest things is like, having the day after Christmas off, or having Christmas Eve, Christmas, and the day after Christmas off. That was a big, thing for them, because that was just between travel or guests coming up. That was more important to them than having 4th of July extended.
Yeah.
So we want their input.
Yeah. And then, the last piece of this, right, when it comes to fostering your financially fit team, is a performance-based pay, right? So creating a pay structure that supports your team in having that long-term financial success in addition to the company. And, what does that mean to them, right? It could be a base salary, it could be a bonus salary. What does this look like? And that also will tie to long-term retention when you have some sort of performance-based pay program in your company, so your team can get raises, over time based off of their performance and what they're contributing to the company, and ensuring that the company stays profitable.
And it keeps people too. I mean, some of my team, they have, pays based on performance. And as they grow and become more proficient and efficient in their departments, in their management skills, their income has grown. So, it's just, and their future here is tied to their performance, which continues every year to improve. So that definitely keeps people here at the company. So, and it's a company culture. So people work harder, try harder, because they know that it's going to affect how their pay is distributed. And they're actually going to have input on it. It's not just always seniority.
Yeah. And I think too, something else to note in this is investing in your team, right? So what does that mean? It could be training, right? So investing in their training. And I know there's that conversation about, well, what if we invest in them and they leave? What if you don't invest in them and they stay, and, they're never going to quite get there because you outgrew them, right? You're investing in yourself maybe, but you're not investing in your team. So your business acumen and mindset continues to grow, and you leave the team behind because you're not investing in their growth when it comes to business acumen and mindset.
And we surveyed, our company about what do they like working here for and everything. And, 16 or over 50% of the people said it was because of the learning environment, and that they were able to, have the opportunity to take classes and courses and to continue to grow as a person.
Yeah.
Big benefit. Not everybody going to work and doing a great job. It's funny, the people that might most go to work and get it done, people are the same ones that want to learn. They're the same ones that do the extra classes, the extra courses, the extra stuff to become better. They also are the ones that, show up the most consistently and outperform the expectations most consistently.
All right. So these are, how you can navigate your financial challenges in your business.
Easy.
Yeah. Easy, right? Yeah.
It's all easy.
And, it's bit by bit. So if you're not there, maybe there's some things where in today's podcast where you said, hey, I do that. That's really great. It's you're doing something in your business that contributes, to that financial success. There might be things that you're not doing yet, so step by step, take a little piece of maybe something you learned today and implemented it in your company. Would not suggest you do all of it at one time, right? It's a process. You want to do a little by little. So if you discovered one thing, maybe put it on your goal list for this year to get implemented, and then another one in the next year and the next year after that. So, this is going to be a long road, and it could be a long, complex road. You don't want to do everything at one time.
It took me about 28 years to start on this road. I was in business for that long before I was really woke up and went, dang, it's not about trucks and equipment and soil and, doing it, knowing it. I have to know my financials. And then I was, it's a hard way to make a hard living, this business. So if you can get a good handle, even a better handle, 5 or 10% around your finances, it's just going to make your life and your family, your employees, your community so much better. And I'm still learning. I'm still going through this. Christine wrote the book Profit First for Lawn Care and Landscape Businesses. As we were going through that book and working through questions and challenges and math problems, I learned so much. I was like, oh yes, I need to do that more often, or I need to bring that tool into my business on a consistent basis. So start on the journey, take the first steps, and then you'll just continue moving forward.
Yeah, it's really continuing, being dedicated to expand your knowledge, and remaining flexible, and giving yourself that grace and space, and that will, over time, it's going to increase your financial acumen and guide your business, to achieving success. So little by little, you will get there.
And if, ladies and gentlemen, if we're going to work that hard, let's make money doing it. Let's have fun doing it. That's what I'm after. All right. Well, thank you guys for joining us on this podcast, and we look forward to you joining us on the next podcast. Stay safe.
Thanks for listening to the Green Profit Academy Pros Podcast,
the show that digs into the challenges of growing a lawn care and landscape business while maximizing your profit.